Hello and welcome to the CT Now special. I'm Anisha Jain. Joining me today is a very special FII voice to help us understand how India is being perceived across the globe and how's the investment mood towards India right now. And to do just that, I have Ms. Alessia Berardi joining us on the show right now. Alessia, of course, is the head of emerging market macro and strategy research at the Amundi Investment Institute, which is the research arm of Amundi. And of course, Amundi deserves no introduction. It's the leading European asset manager and global top 10 player, which currently manages a whopping 2.15 trillion euro worth of assets. Alessia, thank you so much for making time and speaking with ET Now. It's truly a pleasure.
Thank you very much for reminding me.
Thanks for that. But Alessia, that's exactly the first question. Are you hearing a lot more chatter around India? And if yes, what's your reply to your investors about how they should be looking at India as a potential investment opportunity?
So yes, you are perfectly right. Since the elections, there was an increasing attention on how the government would have reacted to the elections results. We had the budget revision last week, and that has been for investors a sort of confirmation in the sense that the budget revision has highlighted a great commitment to fiscal consolidation and at the same time a continuation of the CapEx push, allocating part of the expenditure to the CapEx expenditure coming from the RBI dividends. So that has been a sort of reassurance for investors after the elections results.
Okay, so the policy action is definitely something which is favoring the, the fate of India right now. But I also wanted to get a sense from you as to how the investors are looking at the valuation versus growth conundrum. Because of course, growth is something that India has in ample amounts, but the valuation in the equity markets are a bit rich, even when you compare it with the historic averages. Is that a bit of an impediment to investment, or people are willing to pay a higher price for growth right now?
Yeah, this is a very important point. I think that the investors need to reconcile the high valuation of the Indian market with the high potential growth in India. The evaluation, I would say, that didn't deter investors to enter in the Indian equity market, as we have seen since, I would say, last year, at least coming from the foreign investors. So India is a country in transformation. So we need to continue to monitor growth dynamics, regulatory changes. Investors need to pick companies that are more competitive and the companies that can leverage more, or the most, on the Indian transformation. Clearly maintaining a mindful approach, but constructive towards the Indian equity, regardless of the high valuation.
Fair point. But what are the big themes that people are talking about, which is making them look at India positively? What are you suggesting investors to bet within India? Is it the demographics which is favorable and hence consumption is a big theme to play? Is it the fact that manufacturing is coming up in India and that entire China plus one strategy is working out? Which are those big themes that you are watching out for when investing in India right now?
So I would say that is a combination of what you said. I will wrap up the message in saying that we investors need to look at Indian growth because that is translating in earnings that are very important for the equity investors. Another important theme is the infrastructure catch-up, so the infrastructure gap catch-up that has been put in place quite significantly by the current government. And the other point is the macro financial stability. So India has done huge steps in improving on the external vulnerability and even on the fiscal fragility eventually. So these two aspects are moving in the right direction. On top of that, I would say that Indian companies have a quite high ability to adapt to a fast changing world. And that has to do with digital innovation, where companies in India are at the forefront. So there are several aspects that are interesting for investors.
If I can get a bit more into details with you, Alessia, and try and understand how's been the overall pace of investments changing in India, in the sense of how has the overall inflows into India really moved? Let's say what amount Amundi was parking into India, and if there are any specific stocks or sectors that you have either bought into, or you are looking at, or you're recommending investment into.
Yes, I would say that foreign investors and the Indian equity performance have been very much driven by domestic investors. And that has to do even a lot with the saving financialization that the country is going through. But to be honest, since 2023, we have been seeing the foreign investors catching up in terms of flows in the Indian equity market, because there is a strong appetite by the global investors that is even reflected in the fixed income markets, not only in the equity. Vis-a-vis the equity markets, the budget has been again highlighting some medium-term priorities, and these are important for investors. So we will see probably a revamp of manufacturing and services, even labor-intensive services that have been maybe more neglected in the past. So again, manufacturing sectors, and India wants to be at the forefront in terms of innovation and technological transformation. So again, tech is another important sector to consider. We had a strong flow of IPOs in specific sectors that are really strategic and allowing India to transform itself.
We're talking about a lot of positives which are working out for India, but what do you think could be that risk factor, or something that is a key monitorable for you that you're watching out for that could potentially derail the India growth story?
Yeah, looking at the equity market, I would say that the current high valuation are attracting a quite important wave of IPOs. There is a risk of equity oversupply, right? When there are high valuation, there is a sort of exit from the private equity. There is the willingness to raise more capital at more attractive prices. So we need to, India, we need to balance and to be mindful of the risk of oversupply in equity, because it's a typical factor, a typical phenomenon during bull markets. But if the markets change trend, or there is a sort of downtrend, that is a risk. It becomes a risk to monitor, and that is more related to the equity market. On the economic side, I would say that India growth potential is increasing. 8% of growth probably is not exactly the new potential growth, so it's possible to see some moderation in terms of growth. India, in any case, remains one of the fastest growing countries in emerging markets and in the world.
Okay, Alessia, these were largely the questions I had in mind for you. Thanks so much for making time and speaking with ETNA today. Really appreciate you making time for us.
Thank you very much.